If you're driving for food delivery, Uber Eats, Lyft, any of those rideshare programs, you aren't likely covered. And let's talk about that right now. Hey guys, my name's Mark Flockhart. I'm with Think Insurance, and this channel is all about teaching you guys the policy coverages, comparisons with companies, getting you to the best rates so that you don't have to spend all the time figuring that out on your own. I've been in the insurance industry for over a decade, and I've realized that people just don't understand insurance. They don't get it. They don't want to know it. So this channel is here to help answer those questions more specifically that you want. If you're interested in that, definitely subscribe below. Every Thursday is more for an agent training. So if you're an agent, definitely follow us and subscribe there as well. Also, I am at the end of this video going to recommend some companies that I found online that offer the Uber Eats and food deliveries and all of those extra pieces. So stay tuned throughout this video where I'll give you those companies that you can look into as well. Today we're going to talk about rideshare, and we're going to talk about Uber Eats specifically, because Uber Eats didn't used to be part of the rideshare program. So there's a couple things we should start with. You've started doing the side hustle, right? You're doing Lyft or any type of what we call the rideshare program, which is the Uber Eats. Actually, even Amazon has what's called the Flex. I tried signing up for that to show you guys what it was, but they were overbooked with people, so they didn't have any need for a guy like me that had one accident on his record. So I get that part of it. Anyways, you've got some sort of rideshare program, and that's what we're going to call all of these. They're all grouped into one. It didn't used to be that way, because what it was, if you were to go back about 6 to 12 months ago, rideshare was only doing Lyft or Uber, and that was when you drove people in your car. Well, Uber didn't instantly have coverage for you when you came out, and what you could do is you could opt into buying extra coverage. Well, what happened was nobody kind of expected that to be a large thing, and it turned out to be huge. So what internally is going on is the insurance companies are denying those claims. They don't want any part of it because it's too risky. They think you should have a commercial policy and that you should just have a separate policy for that. Because if you're going to drive delivery, driving people around, any high risk, because now there's a constant driving around hundreds of miles a day, extra bodies in your car, liability limits, coverages, things like that. That's typically where a commercial policy kicks in, where like a taxi car driver would kick in, and it would have a special coverage for those situations. Essentially, because the risk was higher, you would pay more money. Well, the insurance companies quickly caught on that, wait a minute, this isn't a bad thing. This is a way that we can, A, collect more premium. We can actually give another service, similar to like renter's insurance. If you add renters to your auto, you can get a discount, but you can also pay a little extra more for a lower risk. Well, if we can calculate the risk, we can charge the correct fee. And so they did. Essentially, a rideshare add-on is going to cost you a couple $100 extra a year. And that's reasonable, especially if you're going to be doing this full time, or if you're going to be putting a lot of hours into this as a main side hustle. Now, if you're just doing it once on the weekend and just trying to get a 10 to 20 bucks here, it's going to cost you more than it's worth. Not just the insurance, but you've got the gas, all of the extra expenses that you would typically get. Now, I'm not going to go over those today. I'm sure there's 100 YouTube videos about people, their costs and their breakdowns of the gas and wear and tear on their car and tires and people throwing up in them and all of that fun stuff. I mean, shoot, there's a rapper that raps to people in the cars. I think that's kind of fun to watch. So going back to the actual coverage, to answer the question is, are you covered today? No, you're not covered, because unless you've added that specific coverage for those situations, you don't have coverage. Now, you might be saying, well, Mark, I actually bought insurance through Uber or Uber Eats or whatever company that you're with. And yes, they may have some liability limits, but you've got to read the fine print. When are you covered is what makes the biggest difference. So here's the typical path that it covers and doesn't cover. Your car insurance covers you in normal everyday driving. You drive to work, you drive home, all of that. Your car insurance with rideshare covers your car and your liability while you're logged into the app but don't have a client. Now, once a client gets in the car, your rideshare through Uber or Uber Eats or whoever you're going through is covering you for that liability. Now, they're not usually, and some of them have started to do this, but they're not usually covering the car itself, or if they are, they're forcing you to have a larger deductible. In most cases, it's $1,000 deductible or higher, And so there's a little bit of a gap from what you would normally pay in your car insurance, which is usually a $500 deductible, to what Uber or whatever Lyft company that you're with would make you pay. There's a little bit of a gap there, but now you're covered while you're driving for the liability portion. Once you drop that customer off and they go about their way, you now are back to square one where you're logged into the app and you're working. So you're technically not covered in your insurance because you're doing it as a business. In your case, a side hustle. But then if you get hit while you're parked and you don't have a client in the car, who covers that? Because Uber technically said you're not doing it until you're driving, unless they've specifically allowed you. And your car insurance normally would cover it. But once they find out, and if they ever run a registry on if you're doing Lyft or Uber, if they see that you're in that app at the time, I'm sure they're finding ways to check that because it's becoming more and more common. But if that's the case, then they're going to see a lot more denial of claims that would normally be covered. So who's really carrying the biggest risk? The biggest part is adjusting for that, because in all honesty, I get the fact that you don't want to pay your car insurance a few $100s more a year, and you don't want to, on top of that, have to pay Lyft and Uber a couple $100s more a year to get their insurance. At this point, the best fit, in all honesty, is to, one, check with your company and see what kind of options they have. Now, you don't have to necessarily disclose that you're doing this. I know a lot of you are like, oh my gosh, if I tell them, they're going to drop me. And they could. That is a thing that actually has happened before. Because if they don't cover it and they know you're doing it, they don't want to be part of it. So you could call them with the potential, this is what I'm thinking of doing. I just want to know if there was a coverage for that. That's always kind of your backup plan so you don't lose your policy right away and you've got time to shop if need be. But I would shop around and check. So run the prices first with the company that you're looking at. If it's Uber Eats, if it's Lyft, any of those, see what prices they offer and what coverages they offer. It's probably exactly what I said, that path where they are or aren't covered, where you are covered while you're driving. If you're doing any type of food delivery, make sure that the products are covered through that company, because most insurance companies don't like to cover the food portion. It goes back to when people were pizza delivery drivers, which I think is still excluded from that situation. It doesn't quite make sense that they would exclude that and not, so it doesn't hurt to find out more details, but in most cases, pizza delivery is one of those canceled things. Now, if you're doing Uber Eats and picking up from a pizza place, that's different because it's through Uber and Uber Eats where they know that you have a specific insurance. Pizza delivery companies have you use your own car, it's all your wear and tear, but they usually don't have an additional insurance for you. So that's where like Uber Lyfts and Uber Eats and all those guys that deliver food, if you're picking up the pizza and delivering it versus working for the pizza place, that's why there's a big difference in cost or even coverage, period. You've called your current insurance with the company. Let's say Uber Eats is the one that we're going with, and they say we will cover you in the food while you're driving. You've got $1,000 deductible. Now you're going to go back to your insurance and find out what kind of coverages and costs that it's going to be. Most likely what people do is they'll shop around at this point, and there's a few companies that I can recommend to you that are coming back very competitive, because there's about 20 to 30 companies out there, and there could be more that are offering this type of coverage. So according to Investopia.com, they recommend that the most overall, at least their reviews have given, that Geico has actually come in the top rating overall, because they tend to have a little bit different package where it's not just an add-on to your policy. They actually have a completely different policy that allows you not only to drive for one company, because in most insurances, they limit to what you're doing. Well, now you can drive for any of the companies. The negative and downfall to that is, just like all other companies, they're not in all states. So you're going to have to check for your individual state to see if that's an option. The second, and the one I think I like, the second, and the one that keeps coming up on this channel a lot, not that I'm trying to push them, I'm not affiliated with them in any which way as far as this channel goes. I have actually worked with an insurance agency that sells them as a company, and I love that. I love them as a company in general, not that I'm getting paid for any which way for it, but I'll put a link up to there, which is why. But it's Progressive, and Progressive is really good with that add-on. It's one of the lesser expensive costs that will give you that rideshare program. The reason I like them the most, or a lot in this situation, is because they do cover Uber Eats, and they do cover those other Lyft programs and all of the food delivery type of programs like DoorDash. Now, once again, the con, they're not in all areas, and you always need to make sure that you check that they allow food delivery. I just mentioned DoorDash and Uber Eats and that they cover it, but you gotta be very specific to which state that is. Each state has different laws, and this can't be true for every state that there is. Now, they go on to mention a few other companies. They say that Allstate and State Farm, which also tend to pop up on this channel because of states like Florida and California, they seem to be doing really well in. They also offer those addendums where you can have a rideshare program added on. So the last part is I'm going to recommend an additional option that you should look into. You don't have to go super into depth. A lot of people think that it's a lot of work to check a commercial policy. But if this becomes more than just a side hustle and you want it to become a career or interim where you're going to make a good amount of money, I've got a family member that did it full time for a few years. And what I recommend is that you look at possibly doing a commercial policy. There's a lot more coverages, and then if you ever have like employees or work with teams, you've got a lot more options, and there's not as much restrictions or ineligible situations, and you're almost always going to find a really good fit. The cost is not that much more in some areas, depending on your situation. Now, my family member, I think we put them with State Auto because they have a rideshare program as well. But just be very clear on what's covered and what's not. Theirs is a little bit more restrictive and less expensive, so that was a perfect fit for him at the time. All right, guys, I hope this wasn't too informational. It was a lot of data. A lot of companies really want your business. They want you to be able to drive rideshare. They're just trying to fit these legal guidelines to make it work while being able to make some money on the side with it, because at the end of the day, these are for-profit companies. As much as people think that insurance, because it's governed by the government and regulated by them, and you've got DIFS, the Department of Financial Services, that's involved, that it's something that's a nonprofit. It's not. These are businesses that want to earn money. And if they can earn $100 on you in a year, they're happy campers. So they're trying to match up to make sure that they're a fit for you as well. Plus, they don't want to lose the customer, especially if they have somebody that falls on hard times and they need to make extra money, or they don't fall on hard times, but they just want extra income. So there's different situations for everybody. If you're a fit, it's always worth it to check into that. If you guys have further questions, or if you're interested in checking, I do work with a company that works within 21 states. They also work with Progressive and State Auto and Safeco and a whole bunch of these other companies that offer the rideshare. So if you're interested in that, I'll put a link down there below. Just make sure that when you talk to the agent that you let them know that you're looking for an addendum for rideshare, so they don't quote you companies that don't offer that. Anyways, do me a favor, leave me a comment below. Let me know what part of this was helpful, or if none of it was helpful. I will see you guys in the next one.